The oil trade market has recently undergone a significant shift that is benefiting Russia's Middle Eastern allies in the OPEC+. Saudi Arabia and the United Arab Emirates are taking advantage of discounted prices on Russia's fuels, as Western markets are closed off to Russia's crude and products due to sanctions. As a result, new trade routes have emerged, and these countries with some of the largest oil reserves are importing Russian diesel and fuel oil. According to Tanker Tracking and Data Commodity Services, there has been a noticeable shift in the trade market, as Saudi Arabia and the, who have traditionally been close Middle Eastern friends of the U.S., continue to buy, keep, sell, and send out Russian fuels despite the U.S. urging them to help stop Russia from circumventing Western sanctions on its oil. Western nations have imposed embargoes and price limits on Russia's oil and oil products, causing a shift in oil trade away from Russia, with the Middle East becoming a major trading center. Kpler data cited by the Wall Street Journal shows that Russia's oil exports to the reached an all-time high of 60 million barrels in 2022, triple the amount of the previous year. The largest trading hub, Fujairah, is now receiving a significant amount of Russian oil products. Additionally, estimates from Argus Media suggest that Russian oil products are now second only to gas oil from Saudi Arabia in terms of volume. The is also becoming a center for exchanging, covering, and transporting Russian oil. Russia is now sending fuels to Saudi Arabia, which is the world's top crude oil exporter and the leader of OPEC. Alongside Russia, this alliance has been coordinating crude oil supply for over 6 years. Kpler estimates that Russia is now sending around 100,000 barrels per day of fuel to Saudi Arabia, a significant increase compared to before the Russian invasion of Ukraine. Moreover, it appears that Russia is stepping up the pace of diesel exports to Saudi Arabia by sending it directly or by transferring it from one ship to another. Russia began exporting diesel to Saudi Arabia in February because the EU stopped importing Russian oil products via sea on February 5th. Since the EU has banned them from exporting fuel to their countries, Russia is making shorter routes for tankers going to Africa and Asia. To continue earning money from these products, Russia had to find new buyers. Price caps also regulate the flow of Russian fuels to other countries. Just like the cap on Russian crude, the cap on Russian diesel is $100 per barrel, while the cap on lower-cost petroleum products is set at $45 a barrel. According to the head of APAC analysis at Vortexa, Serena Huang, as Russia reorganizes its oil industry, specific trading patterns are becoming more established. The recent shift in the oil trade market is benefiting Russia's Middle Eastern allies in the OPEC+, providing them with new opportunities to import Russian diesel and fuel oil. This is a significant development that will have a long-lasting impact on the global oil market. The relationship between India, China, and Russia has been of great interest to global analysts and policymakers for many years. In recent times, this relationship has taken on new importance, as India and China are two of the world's fastest-growing economies, and Russia is a major player in the global oil and gas industry. As noted in the original text, the strategic trading partnership between India, China, and Russia is flourishing. In March, India and China each accounted for 1/3 of the total Russian oil arrivals, highlighting the significant role they play in Russia's export market. This partnership is mutually beneficial, with Russia gaining access to the rapidly growing economies of India and China, while these countries obtain a reliable and cost-effective source of energy. Following the European Union's ban on Russian oil, crude, naphtha, and fuel oil exports, Russia has turned to countries in Asia and the Middle East to export its energy supplies. Diesel supplies, in particular, have been sent to various countries, including Saudi Arabia, Turkey, and Brazil. In March, there was a significant 33% increase in Russian diesel exports, especially to countries in the East and West Mediterranean regions, such as Libya, Egypt, and Tunisia. Interestingly, diesel exports from Baltic seaports have also undergone a transformation, with a more evenly distributed spread to countries like Brazil, Saudi Arabia, Egypt, and Morocco. This shift in exports highlights the changing dynamics of the global oil and gas industry and the increasing influence of countries outside of Europe and North America. Despite the United States' efforts to discourage its allies in the Middle East from buying fuel from Russia, the increasing fuel imports by Saudi Arabia and the United Arab Emirates indicate a diminishing influence of the United States on its primary allies in the region. Earlier this year, Brian Nelson, the Undersecretary of the Treasury for Terrorism and Financial Intelligence, visited Oman, Abu Dhabi, Dubai, and Turkey to discuss export controls due to Russia's war against Ukraine, Iran's destabilizing activities, and illicit finance that undermines economic growth and foreign investment. However, despite these efforts, the United States' attempts to discourage Russia's OPEC Plus allies from purchasing Putin's oil have been unsuccessful, with Russian exports to the Middle East on the rise. This trend is likely to continue as the energy crisis in Europe persists, and Gazprom's recent announcement that it would be very challenging for Europe to store enough gas for next winter has caused alarm. According to Gazprom, European companies might struggle to get gas levels back to where they were before this winter, and European storage areas are only just over half full as of April 16th. While the winter this year and last year was unexpectedly good, the energy crisis in Europe is far from over, and people are concerned about filling up Europe's gas storage for next winter. The December futures prices for Europe's benchmark prices have increased in recent weeks, suggesting that people are still concerned about filling up Europe's gas storage and aren't sure whether France's nuclear fleet will be available. Therefore, while natural gas prices might be low in the short term, the future prices indicate that Europe might not have enough gas next winter. All of these geopolitical and economic events may have a significant impact on Saudi Arabia's new oil strategy. The country has recently announced a new plan to reduce its dependence on oil revenues, and this shift in focus will undoubtedly be affected by the global oil market's changing dynamics. The impact of these events on the global oil market is also uncertain and remains to be seen in the coming months. In conclusion, the strategic trading partnership between India, China, and Russia continues to grow, and the increasing fuel imports by Saudi Arabia and the United Arab Emirates indicate a diminishing influence of the United States on its primary allies in the Middle. Moreover, the increasing focus on renewable energy sources and the transition away from fossil fuels is also likely to have a significant impact on the global oil market in the coming years. Many countries are setting ambitious goals to reach net zero emissions, which will require a drastic reduction in the consumption of fossil fuels like oil. This shift is already visible in some regions, such as Europe, where electric vehicles are becoming increasingly popular, and renewable energy sources are being invested in heavily. As the world transitions towards a more sustainable future, the demand for oil is likely to decrease, which could have major implications for countries that rely heavily on oil exports. Overall, while India and China's strategic trading partnership with Russia continues to thrive, and Saudi Arabia's new oil strategy remains uncertain, the global energy landscape is rapidly evolving. The rise of renewable energy sources and the push towards a more sustainable future is likely to have a significant impact on the global oil market, and it remains to be seen how countries will adapt to these changes in the years to come. Express your thoughts by leaving a comment in the section below. We appreciate you for sticking with us until the end of this video. Before you leave, please show your support by giving us a thumbs up and subscribing to our channel. Don't forget to hit the notification bell to stay updated with our latest videos. We look forward to seeing you again for more captivating content in the future.